Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 16th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Today is Fed Day. We have the FOMC statement and the interest rate decision later on this afternoon at 1 o'clock p.m. Central Time, 2 o'clock p.m. Eastern. That's going to give us another FOMC key level similar to the one we got in July 29th. We also got one here on June 10th. And you can see, as I mention often, we're going to get another one today, wherever it may be. Call it 3,400 here. Whenever price gets that first move away from it, in this case, it's sold off. When we found the strong low, we mentioned that this strong low suggests we bounce back to that point. Normally you may get it quicker, sometimes it takes a little time. You see we eventually got it. Once it pushed above it, it became support before it rallied. And then it would support the day after the July FOMC key level here, and that's what started this move. Subsequently, after the July 29th level here, we rallied and we formed a strong high. So at some point, we likely come back and get that level. That's 32.39 quarter. We're also going to get a new one today. That's going to be the new September 16th level, and that's going to give us a level to use for analysis and trading as well. So again, if price were to sell off here away from it and grab the lower key level, we may bounce back to it, or vice versa. We may rally away from it, reject at the highs, and then come back to it for a test. So something to keep in mind as we head into the event later on in the day. One thing to add is that typically speaking, you may see more quiet, compressed price action heading into that event. There may be one swing move here or there, but likely staying near value throughout the day. Right now trading 36% of ADR at the moment. Alright, let's take a look now at the NQ. The NQ is currently trading 33% of ADR at the moment and is currently trading on the highs. One thing I did mention here for both the ES and the NQ over the last day is that we're likely going to stay inside the current 5, 6, 7 day trading range here as we head into the FOMC. We currently made our move up and nearly reaching the previous week's high price. Still got a little bit more to go there, but for the most part retesting the previous month's midpoint from below. That's the 500 level, the 505 quarters. And so for the most part, things are looking bullish here. If this low is in, right, we have a shot to reach the 11,700, which would be the midpoint of this move right here. But for right now, again, we have an FOMC coming out later on this afternoon, likely to see some trading range action, so look to fade the edges. As well, we have the FOMC key level bound down here at 10,615. That hasn't been tested since it rallied away from it. At the moment, if we see some sort of rejection up here, that could be an easy swing move down to 1016 after the current development of today's key level. So again, later on today we'll get another FOMC key level. We'll see which way we go away from it, but we have some key targets to use heading into the next few weeks. Okay, here's a look at crude oil. One thing you'll see right here is that we've gotten a significant breakout from the recent narrow range. We talked about this narrow range in the recent session, and I mentioned that we could see about 5 handles of range expansion whenever we do get the breakout. And so far you've seen a huge breakout in the previous session that led to a trending day move up. We closed strong here. One thing to keep in mind is that we could dip down as deep as the 38s here, maybe even 3770s. 3760s, and still be a buying opportunity for a continuation for the most part. The fact that we've rallied now, though, first at least, you probably wouldn't want this thing to come down today, but over the next couple of days it could come back and hit that low and keep on going. That's how strong a level that is. But for the most part today, we've seen strength overall. We continue to hold above the 3860 level at the moment, which is a good intraday level. We may get as deep as 3860, but it needs to be defended for a continuation higher overall. This breakout move, again, we could be looking at a move of about 5 handles overall. That could take us right up the scale here back toward 41s, which is the breakdown point of the recent move. So again, pretty tremendous move right now. Needs to stay above 38s overall for it to continue higher. But whenever you get a breakout of this magnitude here, the expectation is for expansion. We've seen that so far, and we may see more still. So again, if it can hold above 38s, we have more upside ahead. One key thing to keep in mind right now, API came out yesterday afternoon at a draw of 9.5 million barrels. Today's expected EIA is to be a build of 2 million. So this is going to be interesting to see how the market reacts to that. We may already be seeing the result of yesterday's API number. All right, let's take a look here at gold futures. Now gold again continues to be stuck trading in a range here. I mentioned that it's best to avoid the chop in here as of right now. We have seen the last couple of good moves that played out within the range, but we are so compressed now. We have lower highs, higher lows, and we are just hugging the 1957.70 and the 1981.70. Those two are very important levels. You can clearly see that it's 1981.70 is the current highs here, the 2-day highs, and then the 1957.70 is the bottom of today's range, the bottom of yesterday's range. The breakout point is that level here, these highs. And those two levels both come from key ranges. It's first the 100% extension from a prior key range, the large one that we've been following. And it's also, this one is the midpoint of the current key range. Very, very important. We are just compressing right around there, building some energy. And I'm telling you, best to avoid the chop, but one day we're going to see the day where we're going to see the massive move out of this range, and that day is going to say, okay, this thing's ready to rock and roll, and we're going to go another 2 months higher, something of that nature. So again, very, very important right now to avoid the chop, but at some point here we may see a significant breakout move. Again, with FOMC up today, perhaps later on today or tomorrow could be that day that triggers some movement. So we'll see how that plays out. Again, always the potential to see a break downward, but I would say even if we were to break into 1830, it could still be a long-term buy for a continuation higher. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.